All right, Apes. Jack in. The system is flagging a serious anomaly. Codename, Beyond Meat. Ticker, BYND. Now, the official signal says it's a flatline, a totally dead asset. But my console, it's lighting up with ghost data, all these rogue signals. We're going in to decode this glitch in the matrix.
First up, let's look at the official transmission coming from the suits. A net loss of over $110 million in Q3. I mean, that is a staggering number. It's the kind of number that triggers automatic system shutdowns. This, right here, is the core of their narrative. It's a catastrophic failure. End of story. Move on.
And you know what? Based on that number alone, you'd think the suits have it right. But if you look closer, there are these flickers in the code, inconsistencies that just don't add up. It's like the data stream is corrupted. And that's exactly what we're here to do. Analyze the corrupted data that the mainstream terminals are totally ignoring.
So let's start with their version of events. Act 1, the official story. A full-blown, undeniable, total system meltdown. This is the bear case, and it's being broadcast on every single mainstream channel right now.
Here it is, their Exhibit A, a 21% drop in U.S. revenue year over year. In their world, this is an open and shut case. It's a death spiral. The domestic market, the very core of the operation, is just hemorrhaging cash.
Now, this is where it gets really interesting because you have to look at the context. A gross margin of 10.3%. Yeah, that sounds pretty bad, right? Well, it gets a whole lot worse when you find out that just last year, it was 17.7%. See, this isn't just a leak, this is a full-on hole breach. Profitability has been completely vaporized.
And this table just lays out the whole collapse. It's not one little segment, it's everything. U.S. retail, that's where you and I go to buy our groceries, down over 18%. U.S. food service, think restaurants, cafes, down a brutal 27%. Every single channel is flashing red. This is the reality the suits are trying to sell you.
Okay, so that's their story. It's clean, it's simple, and yeah, it's pretty terrifying. But now it's our turn. We're initiating the anomaly detection sequence. Let's look at the data points that don't fit, the glitches in their perfect little narrative of doom.
So here's the crucial point. It's all about perspective. The suits, they see a death spiral. But when we analyze the company's moves on its balance sheet, the data suggests something else entirely. It looks less like a chaotic accident and way more like a controlled demolition.
To get this, you gotta understand dilution. The suits will tell you it's poison, that it's terrible for shareholders. But here's the ape translation. It's like adding water to the soup. Yeah, everyone's bowl gets a little less chunky, your piece of the company gets a little smaller, but the important part is, nobody starves. The company survives to fight another day.
And believe me, they didn't just add a little water. They issued almost 317 million new shares. This is the massive dilution the bears are screaming about from the rooftops. But what was it for? It was a calculated move. They swapped out high-risk debt and extended their financial runway all the way to 2030. They literally bought themselves years of time.
And hey, don't take my word for it. Here's the transmission straight from inside the system. The CEO, Ethan Brown, he calls it a reset himself. They didn't just stumble into this mess. They engineered this move to slash debt and pump in liquidity. This wasn't a panic move. This was a survival protocol. So they reset the balance sheet, a pretty brilliant move. But clearing out that debt wasn't the only fire they were fighting. See, the suits knew about another vulnerability. This piece of dark code in the system they were certain was the final kill shot. It's a secret the bears are still clinging to today, worth exactly $38.9 million.
There it is, $38.9 million. The verdict. Now, on the surface, this looks absolutely devastating. A massive liability that could just eat up all that new liquidity they fought so hard for. The final nail in the coffin, right? Or is it?
Let's move to Act 3 and see how this all clicks together. This is the ape theory. This is where we close the loop, connect all the anomalies, and build a single, coherent counter-narrative.
Okay, let's connect the data points. Now, on the surface, these look like just a bunch of random body blows, but watch the sequence. Step 1, a $38.9 million verdict hits them over the word meat. A seemingly fatal error. But what happens immediately after that? Step 2, they ditch the name. Rebranded just Beyond. Coincidence? Maybe. But then comes the final move, Step 3. They launch a whole new strategy, pivoting to clean protein to fight back against those ultra-processed attacks. You see the pattern here? This isn't chaos.
It's a three-move combo, a planned demolition leading to a total system reboot.
So what if the lawsuit wasn't the final kill shot? What if it was the catalyst, the perfect excuse, the rocket fuel they needed to execute a total system reboot they were probably already planning? They took a massive negative and turned it into the very core of their new strategy. And here it is, the biggest glitch in the entire system. The one thing the suits cannot logically explain away, the options market. Now, for the newer apes out there, options are just leverage bets. You're not buying a stock, you're buying a contract that gives you the right to buy it later. It's how the smart money makes these high-conviction plays without deploying tons of capital. And just look at this data. While the stock is in the gutter, 86% of all the open bets are call options. That's bets that the stock is going to rocket. Only 14% are puts. This is not retail FOMO, people. This is a massive, statistically improbable bet that BYND is about to launch. Someone, somewhere, knows something, and they are putting big money where their mouth is.
So, that brings us to the final verdict. We've got two completely conflicting data streams, two realities existing at the exact same time. Is this thing going to squeeze to the moon, or is it going to zero?
Here they are, side by side. You've got the suits narrative. All red flags. Catastrophic losses, shrinking sales, massive dilution, a crippling lawsuit, a pretty clear path to zero. And then you have the ape theory, a brilliant debt reset, a runway all the way to 2030, a smart strategic pivot to clean protein, and this giant, unexplained anomaly in the options market that's pointing straight towards a squeeze.
Now for the mandatory guardrail. This is not financial advice. This is just educational banter, market speculation. We're just decoding the data stream as we see it. The market is a casino, and the house always has an edge. So you have to do your own research. Don't trust anyone, and especially don't trust some random ape on the internet.
We are watching this chart like a hawk. While you wait for the next candle, grab your free gear. Sign up for Public to get $20 in free assets. Check Webull for that BTC promo, or grab your NVDA stock on Moomoo. Links are in the description. Smash the like, subscribe to the tribe, apes together strong.
So, I'm going to leave you with this question. The suits, the mainstream media, they see a company flatlining. They see a guaranteed zero. But the options market, that ghost in the machine, is signaling a full-on rocket launch. Which glitch in the matrix do you believe? Let me know in the comments below.